Kaustubh Belapurkar, who's Director of Fund Research at Morningstar Investment Managers, joins in with his perspective in the markets. Kaustubh, great to have you in our studios. Good morning. How are you looking at the market positioning currently?
I think some interesting, 2018 has been maybe, I would say, a shift in the way the managers are looking at it. Clearly, one of the shifts that happened was large cap stocks were really the focus of the market for managers, not just because money was coming into it, but even managers were largely shifting towards some of the large cap names. And I think that's a trend we expect will continue at least for some time. Just take some defensive positioning or get into the more steady names. That's expected to continue. On a more sectoral level, we've seen some breakout from the previous years where we saw that financials, why they got some money, but it wasn't as broad-based as it's been before. Selective banks continue to get money. Some of the turnaround sort of stories, your ICICI or Axis, in that sense, got money, but not so much from the others. So I think that trend has changed.
Do they continue to see buying though, ICICI Bank?
Absolutely. We still see, even in the month of December, we've seen a fair bit of buying. Axis continues to see buying, so that's definitely somewhere, managers who were underweight some of these counters have added on positions.
Are the last ones to catch on with the trend.
Right.
What about IT? Because you thought 2018 was great and 2019 is not going to be the same, and look how TCS or even Infosys for that matter has completely negated that opinion. They're confidently saying that we're here and we're here to stay, and we continue to see the kind of growth. And look at the move on Infosys.
Yeah, absolutely. So I think again, IT, it's kind of a tiered approach. So if you clearly look at it, TCS, Enfi, the two favorites, and TCS actually added a lot of positions by managers simply because it's been so under-owned as a stock in the universe. Enfi continues to add positions, but beyond that, we don't really see too much traction from managers. So you see Wipro, there's been selling, TechM, there's been selling, maybe a couple of IT names like LT, ITL, we've seen some buying, but otherwise it's largely the two, the largest companies that are there in terms of additions on the portfolio.
Any mid-cap IT names wherein there's been buying or some acute selling?
I think some sporadic buying in the likes of Mindtree, probably Hexaware, but not something that would really trigger off, the charts.
Okay. Yes Bank was very institutionally held. I don't know, what have you picked up on Yes Bank? I don't see that as part of your list anywhere.
Right. So I think Yes Bank is largely as a play been reasonably under-owned any which ways by the street from the fund manager side. I don't think that's really changing. So we haven't seen people pulling out too much from a domestic mutual fund perspective or coming back into that stock really.
This you're saying even prior to the last 6 months when this whole issue started?
That's right.
So it was never really
not one of the heavily owned. I wouldn't even say it's in the top 5 banking stocks that were being held.
I want to talk about HDFC Bank, because just this morning one of our chartists was saying that on the long-term chart pattern, HDFC is really coming to the divergence point. It's going to be a big move either this way or that, and HDFC Bank would shake off the market.
Right.
Are holdings still intact for HDFC Bank?
Absolutely. You will only see incremental additions.
Okay.
I wouldn't say that it's very aggressive additions now. I think everyone's kind of topped up on that. But everyone's holding steady on their positions. It's about 60,000 odd crores of exposure from domestic mutual fund managed to HDFC Bank. That's a pretty sizable chunk. It is the largest holding by a long shot.
Okay. From the last time that I spoke to this time, auto has continued to suffer, be it in Eicher, even Maruti for that matter has underperformed. Are there significant exits out of auto, even for a Maruti?
Yeah, so that's one trend that we've actually witnessed over the last 6 months. Clearly, that auto there is sell-off. Maruti, classic case in point, we've seen selling in Hero MotoCorp, some of the other names that are. So we're clearly seeing that happening. So the auto and auto comps exposure is dragging down, in terms of an overall exposure for sure.
Okay, Reliance Industries, do you see more build up there? It's one of your top MF buys.
Yes, that actually continues, and they really built steam. I think in the second half, the first half was largely ignored, and when the price action started happening, a lot of managers then were trying to probably a little behind the 8 ball to catch up with it. But if I just look at aggregate 2018 numbers, I think it was the largest amount of quantum of purchase was Reliance Industries by managers.
Interesting. And what about Pharma? Because you're seeing some traction there as well. I'm surprised to see how Sun Pharma is among your top MF buys, given all the overhangs that they are.
Yeah, so Sun Pharma has been, it's been in and out, to be honest. But amongst the pharma names, that's probably one of the names that's still kind of held steady. I think after the dip that happened with all the overhangs that you mentioned, managers still thought that, okay, valuations are probably better than that, what they want them to be at. So that's where we've seen some buying in December, and they've had some positive flow of news come in, regarding a patent infringement case and some approvals coming in through FTA. So I think they're looking at it that, okay, valuations and some positive news flow. Let's bite the cherry there.
What else have been your observations? Anything peculiar which has stood out in mid-cap or small-cap positioning? So
mid-caps actually, because the way the market is structured, I think we've seen very, very limited buying in 2018. I would say about 85–90% of the money is actually gone towards, of the aggregate buying has gone towards large caps, and the remaining towards mid and small caps. So nothing really that stands out, but the one trend that we've seen is the consumer spending place still looks strong. So we see, say hotels segment, we've seen buying through, not very large, but we've seen buying through that. I think that's one play that's really playing out strongly for managers.
Okay. Do you expect more volatility? I mean, there's a broader question because of the election risk. What is your sense on flows into the first half of the year?
Right. So yes, I think there is, and even the month of December was a classic case where we've seen there's a little bit of slowdown of flows in domestic, and like we speak about the steady state, the SIP book, right? That continues to grow, albeit at a slow pace, but the lump sum money is actually coming off. In fact, it's gone into the negative zone now. So we had about 6,000 crores versus a usual run rate of about 8–9,000 crores in the markets. We suspect that's going to be a little bit here and there depending on the way the markets go for the next 6–9 months. That will be something that will be an overhang on the markets for sure.
Okay. Well, we leave it at that then, Kaustubh. Thanks very much for taking out the time and stopping by in our studios this morning. Great chatting with you.